Hey guys, JC Parets here, founder of StockCharts.com, and let's spend a few minutes talking about what I think are some of the most important charts in the world. I was tasked with coming up with a concept that can really explain the year well. I hope I'm doing a good job here. One thing that I think is worth mentioning as we head into the new year is that sentiment today has been much different than sentiment in December of the prior 2 years. So in other words, how investors were feeling at the end of 2020, how investors were feeling at the end of 2019, and what happened after that. Both times the market fell 2 months later. So February of this year, the market peaked. Actually, let's take a look at that here. You can see that the NASDAQ advanced decline line peaked in February. The New York Stock Exchange AD line continued into May, but the best things were, remember SPACs, also biotechnology peaked in February. Chinese internet peaked in February, got crushed, decimated, down 60%. The ARK funds, all these Cathie Wood funds, just destroyed. Some of the worst investments you could have possibly been in this year. All of those Cathie Wood funds just got crushed. The IPO index, another one. You know, those types of names. A lot of the names that did well in 2020 after the COVID bottom, really struggled this year, particularly some of these growth areas that did really, really well. And you can see how many peaked in February. As you can see, the NASDAQ advanced decline line peaked in February. The NASDAQ new highs list also peaked in February. And just to kind of refresh your memory, that's when everybody was getting all spectastic, if you will. And then we got that next move into the spring where financials peaked in May. You had industrials peaking in May, materials peaked in May, and the New York Stock Exchange new highs list peaked in May, and the New York Stock Exchange advanced decline line peaked in May. Another key difference between the New York Stock Exchange and the NASDAQ is on the New York, you're going to get a ton of foreign stocks. In fact, over half of the largest 100 components on the New York Stock Exchange are not American companies. These are foreign stocks that are trading ADRs on the New York Stock Exchange. So you're getting a lot more international exposure than you are in the NASDAQ. You're getting a lot more exposure to more value cyclical areas of the market, things like industrials and financials and natural resources that you might not get in the NASDAQ. That's much more tech, communication, biotechnology heavy, right? So those are some key differences. So, all right, so why are we talking about this? Because with the S&P 500, a week ago today, the S&P 500, I'm recording this on the 17th, so the week ending on the December the 10th, the S&P 500 closed at new all-time highs, highest levels ever. So while certain indexes have continued to make their run, underneath the surface, it's a market of stocks, and most stocks haven't been doing well this year. Some stocks have done well. Most stocks have not. And I think you hear a lot of people talking about market breadth, and and sentiment for that matter, and we're going to address that. By the way, if you're interested in these slides, email info@allstarcharts.com. That's info@allstarcharts.com. Make sure to use the password Santa Claus Rally. Santa Claus Rally comes last 5 days of the year, first 2 days of the following year. So that's your password. Make sure to use that, or otherwise you're going to get a different slide deck from somewhere else. So info@allstarcharts.com, password Santa Claus Rally. And let's remember that when these things got crushed, right, all year, how did that affect sentiment? So what are we seeing currently? We're seeing the fewest amount of bulls since April of 2020. Fewest amount of bulls. These are financial advisors. So this is II. So these are the financial advisors. Fewest bulls since April of 2020. Do you remember what April of 2020 looked like? We were staring into the abyss. We didn't know how bad things were going to get. We have the fewest amount of bulls since then. Looking at the individual investors, what are we seeing? The most bears in over a year. Most bears in a year. Talk about a sentiment shift. Let's go back to June, summer of this year. This comes from like week 1 of June. This is right after the New York Stock Exchange advanced decline line peaked. New York new highs list peaked. Financials, industrials, materials, they all peaked in May. Shortly thereafter, there were no bulls. Here we're looking at individual investors Excuse me. There were no bears at this point. There are no bulls now. There were no bears at this point. So sentiment this summer was a headwind. If you don't have any bears left, anybody who is familiar with the circumstances has already acted upon that. And therefore, everybody's bullish, right? And as you can see, in the II, this combines the financial advisors and the individual investors and takes an average of both polls. And again, no bears whatsoever. This is June 2021. Now, fast forward, most bears in over a year out of the individual investors. Fewest amount of bulls in financial advisors since April of last year. Okay. So why does this matter? Well, as we go into the new year, I think it would be irresponsible to not recognize that sentiment is just not what it was a year ago and not what it was a year before that. We are entering the year with a much different mindset as investors as a whole. And when I was asked to do this for StockCharts, shout out StockCharts, Gretchen, David Keller, what's up? It was like, okay, what is one area of focus that you want to look at this year? And I thought that these shifts in sentiment, the changes in sentiment as you got breadth deterioration under the surface, so not your traditional bear market where you get like S&P 500 down 20% or some arbitrary level like that. This is the fact that the average stock in the NASDAQ's down 37% off its highs this year. Most stocks have struggled this year. Some stocks have done well. Most have not. But what that has done is that has repositioned the mindset of investors. Not only are there not any bears, like there were this summer, there just weren't any bears. Now we have most amount of bears in a year. You know, a price has a funny way of changing sentiment. So if there weren't any bears this summer and sentiment was therefore a headwind, we know sentiment is no longer a headwind. The question is it a tailwind yet? Did sentiment unwind or is sentiment unwinding? Either way, I believe that we are skewed towards a pessimistic group of investors that have mostly struggled this year and had very different experiences than they did in 2020. So where's the holiday cheer? Shout out Willie Delwich with that title. But what I want to show here in this table is that it is much, much different than what we had over the last couple of years. Look at the amount of bulls in individual investors in the AAII poll, 25%, nothing. We were in the mid-40s the last 2 Decembers. Look at the bears, 40% almost bears. We were in the 20s the last 2 Decembers. Now, financial advisors, 44% bulls, that's it, compared to the high 50s and 60s. And how many bears? 50% more bears. And then active investment managers, look how they were positioned above 100. So they can, talk about how much leverage to the long side. It's cut in half. It's cut in half. I think investors have had a difficult time this year. I think the market has done a good job of punishing excesses, those IPO stocks, the ARK funds, biotechnology most definitely, Chinese internet, right? The SPACs crushed. And that demoralizes the souls of the investors that had hung their hat on, Zoom's going to change the world and a Peloton and the Pinterest and, DocuSign and you know the list. Crushed. So to me, I think we are entering an environment in a new year that is much different than what we had over the last couple of years. And just to make sure that we're all on the same page here, the market peaked in 2018 after a heck of a 2017. Market peaked in January of that year, not just in the United States, but globally. Here we're looking at the Dow Industrial stopped going up, Dow Transport stopped going up. Both did nothing for the next 3 years. But it wasn't just a U.S. stock market. Globally, you saw it too. Go chart by chart by chart all over the world. So many things peaked in January 2018. Great. 3 years of nothing. We break out last year. Terrific. Classic, right? 3 years of just global market, just no progress whatsoever in America and globally. We broke out last year and then peaked in May, right? We peaked in May, as we discussed. The New York Stock Exchange Advanced Decline Line also peaked at that point. The new highs list also peaked. Industrials, financials, materials, all peaked. The cyclicals in May. And we had a correction, right? This is then coming into June where we had all of those no bears at all. Just no bears. Sentiment was a headwind at the time. So we did nothing. June, July, August, September, October, November. Here we are in December. We're 6-7 months. It's fair. After a heck of a run that we had last year, it was the greatest 52-week period in the history of the stock market. It's not nothing. Well-deserved year of digestion. Punish the excesses. I think that's fair, and I think we're positioned as, the market rarely gives us well-defined levels, but I think these are two. I think if we are above the May highs in transports and industrials, I think you could be long stocks in general. I don't think the world's falling apart. And then from a sentiment standpoint, I certainly think that there is a bit much pessimism in the market, and the market likes to punish the most amount of participants at any given time, and the most amount of participants are positioned pessimistically. So if those are the participants that are about to be punished, what does that mean for equities, global risk assets? I think it's a positive. But all that I know is that I know nothing. And if we are not above those May highs in the industrials and transports, it's tough for me to make a convincing argument that we should be aggressively buying stocks. I think those are the parameters, and I think sentiment is positioned for that. So if you're interested in the slides or have any questions, please, by all means, info@allstarcharts.com. Make sure to use the password Santa Claus Rally. I am your host today, JC Parets, founder of allstarcharts.com. Say what's up on the interwebs at allstarcharts on Twitter, StockTwits, Instagram, and YouTube. Adios.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.